We've also got earnings in focus. Pranay is joining us with what brokerages are making of Tech Mahindra's numbers. Pranay?
Brokerages are not particularly giving an encouraging sign when it comes to TechM's numbers because they were below 18 hour and street estimates. Its revenue in constant currency terms was flat, but thanks to a cross-currency tailwind of 50 bips, their revenues grew just about 0.5% in dollar terms compared to expectations of 1.2%. And most of this drag came from the enterprise side, which saw a decline of 2.2% across segments. While some weakness in healthcare was anticipated, even retail was expected to be a little soft. Because it was coming off a high base in Q3, the decline in manufacturing as well as BFSI is something that came a bit as a negative surprise. Management indicated that they saw some project closures and deferrals, which is why the decline. Telecom, on the other hand, continues to do well. For the third consecutive quarter, it grew. This time, it was by 4.4%. sequentially. So deal wins also remain pretty strong at about $408 million, evenly split between telecom and enterprise segments. So that indicates that demand is strong, but management was not sure in giving out their outlook in indicative numbers because they see some unevenness in client decision making. So if you look at brokerages like Credit Suisse, they maintain an outperform stance but have cut the target price to about 910. Also their EPS estimates have been trimmed by about 3% because of a slightly lower expectation in FY20 and their exit rate. CLSA also has cut their EPS estimates by about 0.5 to 1%. They maintain an outperform stance with a target price of 810. Lastly, Jefferies also believes that while this Q4 was a mixed bag and maybe a miss to street estimates, the valuations at 14 times current year earnings or 12 times 1 year forward makes it pretty favorable on risk reward terms, and because of a discount that it trades at to some of the tier 1 peers, you could see that after a decline it merits a buy. Yes, and we can listen into the management last evening what they said after the press conference.
Overall on the yearly performance, 12.9% year-on-year growth, almost a margin expansion of 300 basis points. Last quarter, communication business growing at 4.5%. Overall, for the year, manufacturing vertical becoming the second billion-dollar vertical, and the digital accounting for 31% of the revenue. I think there's a lot to celebrate, and I could go on and on, right from the awards that we received in sustainability, the amount of work we have done in CSR, because as a purpose, company with a purpose, we have not always focused only on revenue and profitability. What makes an engineer in Tech Mahindra tick, and what makes all of us tick, is a company with a purpose. Company with a purpose that we spend more than 2%, and we have been spending more than 2% on CSR. We didn't wait for the government legislation. The second part is that we have also doubled the number of ISR hours, which is the individual social responsibility hours. Our ISR index would probably be the highest in India. And even for sustainability, we just got recognized last week by Microsoft, where the competition was over the global MSPs.